Hey, my name is James Nicholson and welcome to my YouTube channel. Now, a number of the Bank of England monetary policy have been interviewed a couple of days ago, and they are indicating, hinting, implying on where they feel interest rates are going. Now, I say this all the time. The markets will predict something, and they might predict, like they did a week or so ago, that the Bank of England would cut rates, and they were right. And if the Bank of England at that point felt that, look, we're not likely to cut, in these types of interviews, they would hint and imply where they see rate cuts going. So anytime you see this content where you see interviews from the Bank of England, you should always have a look at what they're hinting at. They'll never say directly, we will be cutting rates in June, we will be cutting rates in August. That's not how it works, but they will give you an indication subtly on where they feel interest rates are steering. So in this video, I'm going to give you an update on what they're saying right now and what implications that could have on your mortgage and my mortgages and much, much more. Now, if you're new around here and you haven't done already, do make sure you subscribe to the channel over there and hit that bell notification. We're on the way to 42,000 subscribers. That's crazy. We launched the channel just over 3 years ago, and it's absolutely crazy to think nearly 500,000 people watch this channel every single month. So thanks to everyone. And let's get some views on this video so more people know what's going on in the market. How do we do that? Your little bit that you need to do is smash like, tickle like, do something to the like button. That really helps with the YouTube algorithm and helps the channel grow. So, the Bank of England is made up of 9 monetary policy members. So there's always a clear outcome in the voting. And 3 of them the other day were interviewed and they were talking about forecasts going forward. Now, the normal stuff came up. The economy in the UK, is that expected to do well? And that's a bit unpredictable at the moment. We are starting to see companies that are laying off people because of the national insurance increase, because of the business rates increase, and because of energy costs going up as well. And that doesn't bode well for the economy at the end of the year. Now, one of the major things they talked about was inflation. And the Bank of England has a job of getting inflation as close to 2% as they can. And the belief still is strong at the Bank of England that they think that the inflation is going to rise at the end of this year. And that's mostly down to energy costs. Now, the frustration I have with that is that energy is supply side. You or I cannot impact energy costs. And so raising interest rates, the whole idea of it is to curb our spending, to stop us spending lots of money and to rein in the economy. But we don't impact energy costs. And so while you're keeping interest rates higher, we are really hitting people very hard with things like rent increases. Rental inflation doesn't have a high enough weighting, in my opinion, in the inflation data. It's one of people's biggest costs, and it's been over 10% last year, which is absolutely insane. And it looks like that could continue to increase. So inflation is something that they're focusing on. The figures that they were saying were 3.7% inflation by the end of the year, but that's been revised down to 3.5%. But the monetary policy still feel that that is something that could cause rates to not come down as quickly as we can. So they've said that very clearly now. So that probably rules out the June cut. It means next month there is less likely to be a cut, because this is what they do. They start to hint what's going on. The markets will pick this up and we'll see what's going on. What else are they worried about? Wages. This one frustrates me as well. People have been hit so hard by this inflation and they need their wages to catch up just to get some breathing room and get back to where they were a few years ago. But the Bank of England doesn't want wages to carry on going up. Right now, they're going up at 5.9% on an annual basis. They want to get that closer to the 2% as well, because the fear is that people will go on a spending spree. And if that happens, inflation is likely to rise again even more. So look, the indicators are here that they're not comfortable with cutting rates at the next meeting. And they feel that we need some sort of pause for a little while just to see how things play out. Another topic that comes up constantly at the moment is the trade war, the Trump trade war. What impact is that going to have on businesses all around the world? Well, in America, Walmart came out yesterday and said they are going to be increasing their prices within the next 4 weeks. And that is going to impact the American inflation data. Now, businesses from the UK and businesses from Europe, we will also be impacted by that, because we will buy from America, we'll buy from Europe, and costs will change drastically, and people will be looking to make margin in other places where they've lost it in certain regions. That could potentially mean goods and services go up for us. But then there's another side to this story as well, where they've said that potentially China could dump a lot of cheap goods onto the European market and the UK market. You see, with the tariff that they've got with America at the moment, that stands at 30%. So buying from China is 30% more expensive for Americans right now. It was 145% a couple of weeks ago. It's been reduced to 30% for 90 days. That means China has been producing stuff. Those orders are on hold for a lot of suppliers in America. And so China needs to sell that stuff. They can't just have it sitting around. So China potentially could reduce the prices, and that could mean a flood of cheap goods go into Europe. And that also could cause deflation. And so here lies the problem. The problem is the Bank of England don't really know what's going to happen. And that is the problem. On one side, we're saying inflation could come roaring back. On the other side, we're saying deflation could happen. And so because they don't have a clear outcome at the moment, that means that they're more likely to just wait and see. That's what the Federal Reserve are doing as well. The Federal Reserve have the ability to cut rates, and they don't want to do that at the moment because they want to see what actual impact this trade war has. The Bank of England also could have a policy of let's just see how this plays out. Now, it's unlikely that they're going to increase rates. Even if inflation does go up, they're not talking about increasing rates. That's good, that's positive, and that's what we want to see, more talk like that. So that's a win. But the fact is, Barclays and other places have said, look, we've got 3 more rate cuts this year. It may be that we don't get one in June until we get a clear outcome on what's actually going to happen with this trade war. What ultimately we want is the outcome to be decided, not a 90-day pause. Decide, are you going to put tariffs on China, America I'm talking about? If you're going to do it and stick to that for the next 4 or 5 years. That gives predictability, so the Bank of England, the Federal Reserve, and everybody else can start making decisions in order to move their economies forward. So look, this is stuff that we need to know. We need to know what's going on. So if you're getting a mortgage at the moment, it means that some rate cuts, some mortgage cuts might slow down for the next few weeks until we start getting more data on the American economy and the British economy and see what's going on. Let me know what you think about this in the comments below. Do smash like, do subscribe, and make sure you check out all the other content as well on the channel, including this video right here.